This conference will now be recorded.
All right. So welcome to lesson 2. And in lesson 2, we are going to be discussing top-down analysis and indicators. Now, top-down analysis is the key to starting technical analysis. We always start from the top. Okay, let me say that again, because some of you are not going to listen. We always start from the top. And what does the top mean? The top means the monthly chart. We always start from the top. Doesn't matter if you're trading the 5-minute chart, the 15-minute chart, it doesn't matter. We always start from the top. I want you to get that grained into your brain, branded into your brain. We always start from the top. Top-down analysis. We always start from the top. I don't want anybody saying, oh, well, I was only looking at the hourly chart and the 15-minute chart because I was day trading. Because I'm going to say, go back in and listen to lesson 2. What was the first thing I said? Always start from the top. Always. Doesn't matter what you think you're going to do, always start from the top. You want to be successful? You got to follow directions. Always start from the top. All right. Top-down analysis.
So Steve, really quick, I have a question. So top meaning the month.
Monthly chart. Yes, the top starts from the monthly chart, then it goes to the weekly chart, then it goes to the daily chart, then it goes to the 4-hour chart, then it goes to the hourly chart, then it goes to the 30-minute chart, then it goes to the 15, then it goes to the 5-minute chart. I do not ever look at the 1-minute chart. Don't ask me about the 1-minute chart because I will never look at it. And you shouldn't either. Okay. Top-down analysis. Trading from the idea of starting at the top of the market and working your way down, like a trickle-down effect. We start at the market, which is typically the S&P 500, which is ES, right? /ES, and we assess the market. What is the overall trend of the market? What is our overall bias of the market? Are we in an uptrend? Are we in a downtrend? Or are we sideways? Are we bullish? Are we bearish about the market? Is the market seem to be controlled by buying pressure or selling pressure? These are all the questions you want to ask yourself when you first analyze, right? When you first analyze, you want to say, what is the overall trend of the market? So, simple question, is the market going up or is it going down? Okay, number 2, what is the overall bias of the market? Okay, another simple question, are you bullish or bearish of the market? Has it been going up? Has it been going down? Number 3, are we in an uptrend? Are we in a downtrend? Are we sideways? Okay, you should have answered this in number 1, but we're reiterating it because it's very important. Markets trend 3 ways. They go up, they go down, and they go sideways. Which one are we? Are we up? Are we down? Or are we sideways? Now, are we bullish or bearish about the market? Now, you could be in a downtrend, but you could be bullish on the market. You could be in a uptrend, but you're bearish on the market because there's smaller trends inside of those. Okay? Is the market seem to be controlled by buying pressure or by selling pressure? So who's in control? Buyers or sellers? Okay. 1 second here. Okay. Then we look at our sectors. Okay, so first, what do we look at? Our market. Okay, remember that. First, we always look at our market. What is typically our market? It depends on what you're trading, but typically it's the S&P 500, which is the ES. Okay. There's also the Dow Jones. There's the NASDAQ. And also crude oil. So whatever you're trading, it has a parent. And whatever that parent is, you want to be looking at that. That's going to be your market. So in general, the parent is the S&P 500. But if you're trading oil, that would be crude oil is going to be the parent. If you're trading technology, NASDAQ is going to be the parent. If you're trading industrials, then the Dow is going to be the parent. Okay. Then we look at our sector. Our sector to determine what our overall bias is about the sector. Is the sector an uptrend, downtrend, or sideways? Are we bullish or bearish about the sector in general? Is the sector controlled by buying pressure or selling pressure? Okay. Now, what is a sector? Well, a sector is, there's a technology sector, which has all the Apples, the Googles, the Facebooks, and all the technologies. There's the industrial sector that has all the industrials like Boeing, LMT, which is Lockheed Martin, and all those good defensive stocks. There's consumer discretionary. There's healthcare. There's oil, or it's energy. There's all these sectors, okay, and they have a basket of stocks which they have in them. So we have our market, which is typically our S&P 500, but it could be the Dow, the NASDAQ, or crude oil. Typically, I look at the S&P 500. That's why I post the S&P 500 every single day, because that's generally the market. Then you have your sector. So whatever you're trading, say you're trading Apple. Okay, if you're trading Apple and Netflix Apple and Facebook and Microsoft, and you're trading those, then your sector is going to be XLK. That's the technology sector. Okay, and they just did a little spin-off with Facebook actually, that XLC, which is communications, that's its sector now. But if you're trading Microsoft, Apple, then you're looking at XLK. If you're trading Boeing, then your industrials, it's going to be XLI. If you're trading XOM, which is mobile, then you're going to be looking at your energy sector, XLE. So all of these places have different sectors. You want to look at your market first, then you look at your sector. You want to answer these three questions. Are we in an uptrend? Are we in a downtrend? Are we sideways? Are we bullish or are we bearish about the sector? Are buyers or sellers in control of the sector? Okay. After we establish our bias on the market and the sector, we can make our bias about the stock, right? So first we have to do our analysis on the market, then we do our analysis on the sector, and then we could do our analysis on the stock, okay, that we are reviewing. Is it in an uptrend, downtrend, sideways? Are we bullish or bearish about the stock? Is the stock controlled by buying pressure or selling pressure? Once we establish our bias in our market, in our sector, and in our stock, we can establish their direction and if our bias on each of them match up. If the market is trending up, our sector is trending up, and our stock is trending up, then our stock will be in a stronger position to push higher. Same thing if our market is downtrending and our sector is downtrending and our stock is downtrending, then our stock is likely to be downtrending strongly. If our market is uptrending, our sector is downtrending, and our stock is mixed, we don't want a mixed direction. We want all three to be moving in a similar direction or same direction, whether that is up or down. All trending up means strong bullish. All trending down means strong bearish. All trending sideways means sideways or chop. You don't want to be in sideways or chop. So we have this little upside down triangle, and that's the top down analysis. It's a little funnel. First we do the market, then we do the sectors, then we do our stock, and that's how we develop our biases. Okay, and then there's a tab in our Thinkorswim that has a heat map. Market watch is going to green, dark pink, and they're going to tell you where money's flowing to and where money's coming out of. Because what is the market? The market is just a representation of money flow, right? That's why it moves in waves. All these waves keeps moving because all the money keeps moving. The money never stays. The money never stays still. It always moves into different sectors. So one smart way to do this is by using Market Watch, which is a heat map on the entire market. When we go to the Market Watch, we want to click S&P 500. That is typically our market. Our market means that it is the parent of our stock, and the S&P 500 is typically is a very good indicator of the overall health of the stock market as a whole. It is the top 500 stocks in the market. So in generally, if they are doing well, your stock is doing well. And if it isn't doing well, then most likely your stock may not be doing well either. We refer to the S&P 500 as the tide. Okay, remember waves. Oh wait, we haven't got into that yet. Okay, we'll get into that in a bit. So we refer to the S&P 500 as the tide. We like to say when the tide is high, it lifts all boats, which are the stocks, right? If the tide's high, all boats will rise, meaning all stocks will rise if the S&P 500 is high. Now, when the tide is low, that means stocks are going to be low as well. So, meaning the market is doing well, the majority of stocks are going to do well. And then the tide is low, then the market's doing bad, majority of stocks are going to do bad as well. Okay, so on this heat map, there are 6 colors. There's light green, medium green, and dark green. And there's light red, medium red, and dark red. The light color means high money flow. So the green means into, and the red means out of. The medium color suggests average money flow. Average money flow in with the green, and average money flow out with the red. And the dark color suggests an in-between day or consolidation or little to low money flow, meaning that it's pretty much flat. So the sectors that the S&P 500 heat map show here are information technologies, communication services, financials, healthcare, consumer discretionary, industrials, consumer staples, utilities, real estate, materials, and energy. The reason why we use this heat map is because we want to know where money is flowing in and out of. The heat map gives us a very quick and easy guide to understand exactly what sectors and industries are receiving money and which ones are losing money. So if we look at this heat map, we could tell right away that healthcare isn't doing much. It's all dark. So healthcare is flat. We look at industrials. We have some industrials receiving some good money. LMT, RTN, NOC. And we had FedEx losing a lot of money. Okay. Utilities, real estate, materials, they're flat. Consumer staples, they're flat. Communication services, pretty much flat. Facebook receiving some money. But financials, they're losing a lot of money on this day. Financials are losing a lot of money, and information technologies is gaining the most money. So just by this heat map, we could see where's money getting taken out of and where's money going to. So money's going to information technology and energy. Energy sector was getting a lot of money as well. They're losing a lot of money. So financials and energy sectors losing a lot of money, and information technology was the only one gaining money with some industrials. So it's just a quick way of analyzing where's the money going, where's the money coming from. Okay, where are we selling off? Where are we actually rallying?
Steven, I have a quick question. Is there a significance on the size of the square or its rectangle?
Say that again.
Is there a significance of the size of the square, or if it's a rectangle? For instance, Microsoft is the largest square in that sector as opposed to Apple. Is it the size of the company?
No, it's the size of its weighted. So it's weighted in the S&P 500. So it's
Oh,
weighted
okay.
more than Apple. So
Okay.
it affects the industry. I mean, not the industry, the ETF more than Apple does by a certain percentage.
Okay.
So Microsoft, Visa, MasterCard, J&J, UNH, MRK, PFE, Apple, Google, Amazon, Boeing, Netflix, JP Morgan, Bank of America, Mobile, Walmart, Coca-Cola, Pepsi, all these bigger ones, they affect the S&P 500 more than all the smaller ones because they're weighted more.
Got it. Okay. Thank
Okay.
you.
All right. Now, for the sake of this class, I want you guys to focus on one stock. One stock. One stock through this whole course. After you're done with the course, you could choose more. But I really want you to focus on one stock. You want to be a master of one stock and not a jack off of all. So you don't want to be chasing all these different stocks. You want to master one stock. Because if you could master one stock, then you could master other stocks. If you can't master one stock, then how you gonna master other stocks? How are you gonna be able to juggle other stocks when you can't even master one? How are you gonna master 4 or 5 if you can't master one stock?
Would
So
you be okay with ES?
ES is futures. So unless you're trading futures, you're gonna want to do SPY or SPX.
Well, I'm trading futures right now, but I've been wanting to just master futures because of my schedule. It's easier for me to trade at 7 o'clock in the morning Central Time, and I can just book out if I've made what I want.
Yeah, you could focus on that. That's fine.
Okay, all right.
So in choosing your spouse, so since we depend so much time on analyzing our market, and trust me, it takes time to analyze your stocks. Okay, it takes time to analyze them. It took me maybe an hour to do my S&P 500 analysis I posted an hour ago, and I already knew everything I wanted to say, but it took me that long to actually do the work. Now, So since we take so long, we want to use that time efficiently and effectively. Therefore, you should only max out at 4 to 6 stocks that you are trading, because you always want to be able to understand those stocks. And if you're trading 20, 30 stocks, then you're always going to be missing out on moves or chasing moves or not being ready for a move. But if you have 4, after this is after you've mastered 1, right? And you have 4, you could put 4 on a screen and watch them. You could put 5 on a screen and watch them. Okay? You can't effectively put 10 on a screen and watch them unless you've been doing it for a very long time. So focus on 4 to 6 stocks that you would like to trade for at least 3 to 5 years and commit to them. Now, this is, of course, after you've mastered that one stock that we're going to go through. Okay. Why must we do this? Well, because we not only need to analyze the stock, but we need to analyze the sector ETF. So if you choose, say you have 3 stocks. Say you have Apple, Valero, and you have J&J. So you have Apple, Valero, and J&J. So you're like, oh, I got 3 stocks. That's nothing. I got this. Well, you don't have just 3 stocks. You have 3 stocks, 3 sectors, and a market. Okay, could be 2 markets, could be 3 markets. So now what do you have to analyze? Do you only have to analyze 3 stocks? No, you have to analyze 9 or 7 to 9. Why? Because the stock itself is 3, the sector themselves is 3, and then your market could be 2, 1, or 3. And that takes time. And you can't do that effectively and efficiently. So focus on 1 for now, and then when you get good at it, focus on 4 to 6 and marry them. Why do you need
Can you
30
repeat that?
stocks? I said focus on 1 for now, and when you get good at that, then you could choose your 4 to 6 and marry them and commit to them. All right. So in choosing your stock, you want to take your selection from the top 5 stocks in your sector ETF. I would say the top 3, but I'm giving you a little more leniency and saying the top 5. So you find your sector ETF right here on sectoretf.com/spiders. And I will show you how that looks like. I'll show you what that looks like. All right, so this is what the sector spiders look like. And we have our XLF, which is financials, XLRE, which is real estate, XLE, which is energy, XLU, which is utilities, XLK, which is technology, XLB, which is materials. Give me 1 second. All right, there we go. All right, XLB, materials, XLP, consumer staples, XLY, consumer discretionary, XLI, industrials, XLC, communication services, XLV, which is healthcare. And if we click on these, we go down, let's see, XLV. It'll give us a little snapshot, but we want to go to holdings. We want to go to holdings, and it's going to be categorized in the index weight of the sector. So J&J is the most weighted at 10% in the ETF. Next is UNH, United Healthcare, which is 7%. And then it's MRK, which is 5.74%. And then it's PFE, which is 5.41%. And then after that, it drops down into the threes. So that's why I want to focus on the top 5, because those are the most weighted. I'd rather you focus on the top 3, but giving you more leniency. Now, the more weighted the stock is to the sector, the more it's going to react like the sector. So when money comes into the sector, it's distributed in equal weight. So J&J will get 10% of the money, UNH will get 7% of the money, and so on and so forth. Now, we saw J&J, UNH, and MRK in the health sectors. They were big boxes because they're more weighted. So I want you to choose your stocks in the top 5 weighted in your sector, right? If you want to choose SPY, SPY doesn't have a sector because it's a representation of the S&P 500. So it's its own sector, okay? If you want to do SPY or the S&P 500, then you're also going to have to look at VIX, because that is the opposite of the S&P 500. All right. So let's get out of here and go back.
Steven, do those holdings, do they get rebalanced at any time?
Yeah, they do, and sometimes they the stocks get taken out sometimes, but I mean, when you pick a big company like J&J, UNH, or Apple or Nvidia, they're not going to be taken out.
They could drop though on the placement, like within a certain time frame, though, correct?
It'd take a lot for them to do that. So
Okay.
another company would have to exceed their worth. You know, like say Microsoft and Apple are the top dogs, right? They're both trillion-dollar companies. They're the top dogs, and then AMD comes out of nowhere, right? And now it's a trillion-dollar company. Well, if that happens, then yeah, they'll move them away, and then AMD will be up on the top, right? But it would take so much for that to happen.
Is Tesla, that would have happened if Tesla was in a sector, correct? Back when Tesla hit all-time high?
It's not, so it's not like the stock hits a certain point and then they're like, okay, we need to change this out. They do this quarterly and yearly.
Ah, okay.
Yeah. So
Okay.
it can't be like on a one-time thing. Yeah.
Steve, I see the Microsoft in S&P 500, S&P 100, NASDAQ, Russell, and Dow, all across in heat map.
Okay.
So it's not, Microsoft is not top in the list in S&P 500. It's also in the list of NASDAQ and Dow Jones also, right?
Microsoft is going to be in XLK.
Okay.
And in the NASDAQ, because the NASDAQ is technology.
Okay.
Okay. So after you choose your sector ETF, you want to click on the holdings, look at the top 5. I went through this on the site. So here is an example. We have XLU, and XLU is the utility sector ETF. And we have D, which is Dominion, which is the number 3 stock in the utility sector. Notice the similarities. They're almost like a mirror. This stock price and this stock price are identical, almost. Very, very close. Now, there's certain movements that Dominion has that XLU doesn't have. Like here, Dominion dropped lower to its 200-day and then popped back up, whereas XLU never got close to its 200-day here. So you're going to see similarities with your sector, ETF, and your stock price. I mean, your stocks. Okay, and this is why we look at them. We want to see the strength of the sector compared to the strength of our stock. And we want to gauge that. Why? Because we want a stronger stock than our sector, right? We want a stronger stock in our sector when we're bullish, and we want a weaker stock in our sector when we're bearish. Now, why is that? Well, because a stronger stock is going to do better than its overall sector in a bull market, and a weaker stock is going to do worse and sell off more in a bear market than its sector. Does that make sense? All right, so homework number 1, choose your stocks and ETF. So for this homework, you're only going to choose 1 stock, 1 ETF, 1 market. All right, so now let's go into our indicators. So let me everybody have their Thinkorswim open. Everybody have their indicators on. Everybody have their charts set up like me or no?
Is that from the YouTube video?
Yes.
Yeah? Okay.
Yes. Got it.
Awesome.
Where did you get that? I have my chart set up, but not like you. Where do we get access to that?
Yeah.
I do have a video on my YouTube, but I'll also show you here. Let me
Is it
just
private or it's public?
No, it's public.
Okay.
But it's an old video. I have updated it since. So let me grab my chart here. Let me see. Opening my chart here and clear on the daily. Okay. So this is what your basic chart looks like on this side right here. It's just your green and red candles with your blue volume bars, and that's all. So the first thing that we do is put on our TTM trend. Okay, and let me go into my charts. All right.
Well, I went to thinkorswim.com. Do I have to download the app or something to get that screen? Because I'm still showing like white screens and pretty old school stuff here.
So it's a white screen on your Thinkorswim.
Like I went to thinkorswim.com and then I logged in, and it's like basically showing me my account overview and.
You have to download the program. You're just on the website, right?
Yeah. Okay, so how do I download the program then?
Should be a download link on there.
Yeah, you just download Thinkorswim.
You can call Thinkorswim, they can walk you through it also.
Okay. Yeah, I would just probably just have to go because I'm on a Mac, so I probably just have to go to the App Store then, you think?
No, you'll download it. You could even go into your account and then go to like tools and then download Thinkorswim, and it'll download it for you. And then you just open it up and then go into your Mac settings and allow it to download, and it will download to your applications.
Alrighty, for sure. Yeah, I was just trying to download it from tools. I'm trying to see where it is. All right, no worries.
Okay. Let's see here. So reset to factory default. So this is your screen factory default. This is what it looks like. So the first thing that we're going to do is we go to studies, go to edit studies, and a little box pops up. That looks like this. Edit studies. And then first thing we're going to type in is TTM. And that's going to be the Ttm trend. Okay, once we have the Ttm trend in here, we go to settings, and that's going to bring up another box that says Ttm trend customizing. And then we go down to globals down here, and then we change that trend up to green. So then we have trend up green, trend down red. Then we click globals, and then we push OK. Then we push OK. And then our candles, once we push OK on that, our candles look like this, red and green. Now, these aren't buy and sell days anymore. These are TTM trend candles. So let me make this clear to you guys, because a lot of people have difficulties here. This doesn't represent red or green days. This represents uptrends and downtrends. Okay? Uptrends and downtrends. So the green is going to represent uptrends. The red is going to represent downtrends. So I could look at this chart and I could see, okay, we're in an uptrend here. Okay, we're in an uptrend here. Okay, now we're in a downtrend here. Okay. I don't even have to do any work to establish that we are in a downtrend. We're in a downtrend here because these are red candles. Here, I don't even have to do work to identify that we're in an uptrend here because these are green candles. But I could see that we're in an uptrend, and then I could see that we're in a downtrend. All because of the color of the candles. So here I could say, okay, this is going down more. Okay, my red candles, I know that. These automatically turn colors. Okay, so no matter what time frame you're in, they're going to automatically turn colors. So here, it was a downtrend. And then here, after these 4 candles, it made this high. Now it's an uptrend. And then here, after it broke here, now that's a downtrend. Okay, still downtrend, then an uptrend, and then a downtrend. You got a question?
I was asking if you did not have that study on how the candles would look, but I just saw it. I just visualized it now that when you were showing that example. So I changed the trend down and the trend up on mine, but it still has the original candles. Oh, let me hit.
You got to push apply.
Yeah, I mean, I hit that. That's fine. I'll go back and rewatch the video.
So the original candles will look like this. Red and green, red and green, red and green, red and green, red and pink, red and pink. The TTM trend, right? Go to edit studies. Type in TTM trend. You go to edit TTM trend. Okay, you go to TTM trend. Then you scroll down. You go to globals. Click that. Change that to green. And then you push OK. You push OK. And then you push apply. And then your original candles will look like that. And then your TTM trend candles are going to look like this. All red instead of green. All green instead of red. Because it measures the trend. Measures the trend. Now, another thing. These open candles, open candles are green days. Those are bullish days. Those are green days, meaning the market opened at a price and it closed at a higher price. The closed candles, the filled in candles, those are red days, which are negative days, meaning that it opened at a price and it closed lower than that price. Okay, that's what the filled in candles are, and that's what the open candles are. So the green candles are no longer green days, the hollow candles are green days, and the filled in candles, those ones are gonna be negative days.
Steven, my candles, the trends are showing up, but the candles are all solid. Is there another setting somewhere?
Yeah, so you click this top. You click this top gearbox here.
Okay.
It says chart settings. Click that, and then you go. There's a little box that opens up, and I'll show you. Real. Let's see here. So this little box will pop up, and it has general, price access, time access, favorite time frames, appearances. So you go to appearance, and then you could unclick the filled up. So unclick that for the
Okay.
filled up, and then it won't be filled.
Okay. So do you want me should I uncheck both of them? I have both of them checked on mine.
No, the filled down is supposed to be checked.
Okay. Thank you.
Huh? All right.
Hey Steve, so I just downloaded the Thinkorswim app or the desktop version, so I just be able to look at what you're doing later, right?
Yeah, 100%. Or you could jump on right now and go with us as we go.
Okay, I'm just getting to the accept all and the front page of it, so I just got done getting into it, so
Okay.
took a little bit to download, but you
All
said
right. So
TTM.
yeah, TTM Trend. So this is your old chart, and this is how your new chart's gonna look. All right. So next indicator is we're gonna go to candle type, and we're gonna do candle. It should be automatically placed on your chart like that, but I just put that in just in case it's not. So you want to do you don't want to do standard mode. You want to be candle mode. So you go into style and you go to chart type and go candle. Not the candle trend, just a regular candle. So the candlestick shows the most information of all of the choices of price. The top of the candle, which is most times referred to as the wick, shows the high of the candle. The lower wick of the candle shows the low of the candle. The green candle in the middle or the red candle in the middle shows the open and the bottom range and the close of the day. So the green candle is going to close on the top of the range, whereas the red candle is going to close on the bottom of the range because the price closed lower. The size of the body indicates the strength of the buyers or the sellers between the open and the close of the day. A large body between the open and the close on the bullish candle suggests the buyers are strong in this market, while a large body between the bearish candles suggests the sellers show their strength in this market. These candles show a battle between the buyers and the sellers, the battle of supply and demand. So that's why we use candlesticks. So we have the high, we have the low, we have the open, we have the close. Okay, and then we have the wicks and we have the body. That's our basic candlestick. We have our low, which is the wick. We have our open, which is the bottom of the body, or the top of the body if you're bearish candle. And then we have the close, which is the top of the body, and then we have the wick, which is the high of the day or high of that period. Our next indicator is simple moving averages. So we want to add 3 simple moving averages. Well, actually, I'm going to add one more. So the 3 simple moving averages we're gonna add here are the 50-day, the 100-day, and the 200-day. Those are your basic simple moving averages. And we just type in simple, and it has simple moving average in it, and we click it 3 times, and we get it. Then we change the price. I mean, not the price, the length of it to one of them will be 50, one of them will be 100, one of them will be 200-day. And then we want to change those colors. The 50-day is going to be yellow, the 100-day is going to be orange, and the 200-day is going to be red. Okay, once we do that, it's going to look like this. So let's get in the chart and do that. So we're actually going to, instead of adding 3, we're going to add 4. So we go to Edit Studies. All right. Once we go to Edit Studies, a little box is going to pop up. Edit Studies box. And then we're going to type in simple. And then we're going to type that in 4 times. So 1, 2, 3, 4. The first one, we're going to click Edit. And we are going to do the length is going to be 50. And that's all we're going to change on here. And then we're going to go down to the color. And we're going to choose yellow. Let's just do this yellow. We're going to do yellow. So all we change is the length, which is 50, and the color, which is yellow. And that's it. And we're going to push OK, and then go to the next one. So we could see that that changed to 50. So now we go to the next one. So this one, we're going to change the length to 100, and we're going to change the color to orange. And that's all we changed, 100 length and to orange. Then we're going to push OK. And then we could see that is 100, that's 50. Now we're going to change this third one, and we're going to click on that. And then we're going to change that length to 200, and we're going to change that one to red. Actually, maybe I want to change this color. Oh, we'll keep it red. We'll keep it red. Okay, to red. And then we will push OK. We'll push OK. So now we have the 200, the 150 day, and then we'll go to this last one, this new one, and we will share something else. And then we're going to change this one to 20. and we're gonna keep it blue. And then we're gonna push OK. We're gonna push OK. So now we have our 20, our 200, our 100, and our 50, and our TTM trend. So now we're gonna push apply, and now our chart, our old chart, is gonna look like this. Our old chart is gonna look like this, and then our new chart is gonna look like this.
What
So
options
now
did you put for the TTM?
excuse me?
I said, what options did you put for the TTM? When you click on TTM, the values and style and all that?
You don't touch anything. You just scroll all the way down.
The TTM trend, that's it? Just add it?
Yeah, just add the
Gotcha.
TTM trend, and
Gotcha.
then go into the settings and scroll all the way down and click on globals, and then change that blue to green, and that's all.
Gotcha.
All right, so now your stock chart is gonna look like this. So now you have your 200-day, which is red, your orange, which is 100-day, your yellow, which is 50-day, and your blue, which is a 20-day. So if we go to our monthly, we're gonna have the same thing. We're gonna have our blue, yellow, orange, red, and then we could see where the stock price is hitting these areas. Let's go back to daily, and we can see that we're underneath all of these moving averages. Now, when we're underneath our moving averages, that tells us something. Now, what does that tell us? That tells us that on the average 200 days of trading, we are the weakest. On the average of 100 days of trading, we are the weakest. On the average of 50 days trading, we're the weakest. On the average of 20 days, we're the weakest, right? So we are the weakest across the board on Valero currently. And we know that also because we're in a downtrend. Okay. So when we are below our moving averages, that tells us we're very weak. And let me fix this here, 15. Okay. So we're very weak in Valero. So Valero is very bearish. And this 20-day moving average is acting as a downtrend resistance point. So it was acting as a support here, and then it broke through, and then here started acting as a resistance point. Okay. Now, our moving averages are support and resistance. So we look at these and we say, okay, we hit our 200-day and then we just broke through. And then what happened here? We came back and tested that 200-day and sold off hard. Okay, now we're hitting our 100-day on our week, or no, our 100-day on our monthly. We're hitting our 100-day on our monthly and we're catching that support there. Okay, but if we lose that support, where's our next support? Right here at our 200-day, which is also the bottom of this channel. So that could be a good area for it to go. Now, let's go back to our weekly chart. Our weekly chart, we can see our 200-day acted as support and our 100-day acted as resistance. So support, resistance, resistance, support, support, resistance, got through, and then gap below this support and sold off. Let's see, and the 20-day acted as a support of the trend until it wasn't, and now it's a resistance of the trend. So when this curls over and this stock comes back to touch it, it's going to act as resistance, just like it's acting as resistance here. Okay. Now, another thing, when these moving averages cross each other, it gives you a signal that the market is either good or bad. A strong market is going to have all of its moving averages in sequence. The 200-day is going to be at the bottom. The 100-day is going to be in the middle. The 50-day is going to be on top. And then the 20-day is going to be on top of that. That is a healthy bullish trend. Now, a bearish trend, the 200-day is going to be on the top. The 100-day is going to be next. The 50-day is going to be next, and then it's going to be the 20-day. So the 20-day is going to be the first thing towards price. Then it's going to be the 50-day. Then it's going to be the 100. Then it's going to be the 200 above price. That is a very bearish market. So right here, what do we have? We have the 20-day cross over the 50-day, which is a bearish. And then we had to cross over the 100-day, which is bearish. Then we had to cross over the 200-day, which is extremely bearish. Okay, but now we're getting an even more bearish signal because we have our 50-day cross over our 100-day, which is bearish. And now it's an attempt to cross over the 200-day, which is extremely bearish as well. And then the 100-day is curling down, so that's going to head to cross over the 200-day as well, and that's going to be a very bearish cross. So all these crossing over of the moving averages, these are called death crosses. When the 50, 100 cross over the 200, or when the 50 cross over the 100, these are called death crosses. This is because the price is lower on average from the past 50 days than it was the past 100 days. So this is telling you that this has been in a bearish trend for a while. So we're about to get that bearish cross here, right there. So let's see what let's see what a more bullish stock looks like. So let's go to Netflix. So here's a more bullish stock. And then we could see that our 100-day is crossing over our 200-day, which is a very bullish. So before we had our 200-day on the top, and then we had our 100-day, then we had our 50-day, then we had our 20-day. So this stock was very bearish here. But then it turned around, and then the 20-day crossed over the 50-day, that's bullish. Then the 20-day crossed over the 100-day, that's bullish. Then the 20-day crossed over the 200-day, that's bullish. Then we had the 50-day cross over the 100-day, that's very bullish. And then we had the 50-day cross over the 200-day, that's very bullish. And now we have the 100-day crossover the 200-day, that's very bullish. These are called golden crosses. So when the moving averages are above and they cross to the downside, those are called death crosses. And when the moving averages are above and they cross above, are below and they cross above, those are called golden crosses. So here we have almost like the complete opposite of what Valero had, where we have this crossing over the 200, and this is very bullish. And now we could see the 20-day acting as support of this trend. So every time that this hits that support, it bounces. So what did it do today? It hit that support and it bounced. Okay, that. So this stock in general looks bullish. Let's see here. So Netflix looks bullish as it's above the moving averages and it's above the 20-day, and it's holding the 20-day as support. Now, if Netflix loses that 20-day, and more importantly, it loses that 50-day, then we're going to have a problem, especially if it loses its channel, because then we're going to not be crossing over. We're going to start turning back over again. Let's go to the weekly. And then we see on the weekly, this is very bullish because we have our 200-day at the bottom. We have our 100-day next. We have our 50-day next. And then we have our 20-day next. So fast forward to where we are here. We did have a crossover of our 50-day, but now it looks like it wants to cross back over with the 20-day to cross over again. If that happens, that's very bullish, and this can continue higher. Let's go to our monthly and see here. Monthly chart, very bullish because why? We have our 200-day, our 100-day, our 50, and our 20. So all that is looking good. This bounced on the 20. This one crossed the 20, but then it came back above, and now it's above the 20. So monthly chart looks bullish. Weekly chart looks bullish. The daily chart looks bullish. So this looks like a nice bullish chart. We were in an uptrend, then we got into a little downtrend, and now we're coming into another uptrend again. So we go to Valero, and we see it's the complete opposite, where we're in a downtrend. Moving averages are crossing over to the downside. We go to the monthly chart. The monthly chart, we have our colors in order, but the 20 is curling down. On the weekly chart, we have our colors are not in order here because we have our 50 and our 20 below the 100 and curling down. So it looks like our 50 also wants to come curling down below the 200 as well. So you got to remember that the longer time frame period that the moving averages are, the slower to turn they are. So the 50 and the 20 are going to move faster than the 100 and the 200. But when these curl and they cross over each other, that's very bearish. It tells you that this has been a bearish stock for a while. All right. Anybody have questions on moving averages?
This is Zach. It makes sense. I'm looking back at the Netflix weekly, and it looks like the 20 is just crossing over the 50 and about to cross over the 100-day SMA.
Yeah, so that's good.
Yeah, very bullish.
Yeah, and if you saw how Netflix performed today, it performed very well.
Appreciate it.
All right. Any other questions on the moving averages?
Oh, can I ask you one more thing?
Oh, I'm sorry.
Go ahead.
Steven, does your video, when you're setting up the charts, does it include setting up the time frames also?
So these are going to be your time frames.
Okay, they're pretty standard.
Yeah, pretty standard.
Okay.
Steve, one more piece in the setup. I was just curious. I think I understand what the breakout signals are, but what are your thoughts on the breakout signals for the SMAs?
What do you mean?
The simple moving averages in the settings. If you're in edit studies for the simple moving averages, there's a flag for show breakout signals.
Yeah, that's just noise, and it's gonna put a bunch
Okay.
of things on your charts. You don't want that.
Perfect. Thank you.
All right, so we got moving averages down. Let's go into okay, we got moving averages down. So now we want to do volume. Okay. So let's go into share something else. Let's go back to the charts. So we're going to do two types of volumes here. And there's a reason why I do two types of volumes in the same, because it's useful. So we're going to share something else and then edit studies. So you're going to go to edit studies and add a study, and then you're going to go to volume 50. Okay, volume average. So volume average, and then that's going to pop up there. So that's it. You want to have this volume average in here, and then you want to grab it. So grab it with your mouse, and then you want to move it up to volume, to the volume box. So it's going to end up in your lower study first. You want to grab it and you want to move it into your volume box. And then you guys probably don't have this, so I'm going to send it to you. So we have buying and selling pressure. So you're going to double click that, and then you're going to grab that and then put it in your volume box. And I'm going to share it with you guys right now. So it takes a second. There we go. So copy. And then I will send it to you guys in the chat. So now I sent it to you guys in the chat. I want you to highlight it and copy it. Okay. So you highlight it, copy it, and then what I want you to do is go to your Thinkorswim.
Did anybody else get it in the chat? I'm not seeing it.
No.
Are you sure? Check again. I know I saw a couple of people that seen it. All right. So when you get that code, I want you to go to this I want you to go to this setup. Are you guys seeing it or no?
Oh,
No,
I see. I thought you meant GoToMeeting chat. It's in the Facebook chat.
Oh, oops.
Yeah.
Okay.
I mean, I could send it there too.
No, no worries. I was looking at the go-to chat thinking I was losing my mind.
Okay, I sent it to both.
Got it.
All right, so just copy that that HTTPS, and then I want you to go to setup in your top, or your setup in your top right hand corner of your Thinkorswim, and then click open shared item. Once you click open shared item, it's going to say type in a shared URL, and then you just copy that code in there and push preview, and then push open.
I'm getting a URL you've entered appears to be broken. Do I just need to copy it and then post it in a browser and then copy it from there?
No. So just copy it, the link that I sent, just copy it, and then go to your Thinkorswim and go to setup in the top right hand corner.
And if you copy it from Facebook, it adds a bunch of crap. So just if you copy it from the chat, it doesn't add all that when you copy paste. The chat from the GoToMeeting, I mean.
Oh, the chat from the GoToMeeting.
Yeah, because if you copy it from Facebook, it's the big old permalink type thing from Facebook ad.
The issue was. Thank you.
Yep, I did the same thing.
That worked, thank you.
Okay, you got it now?
Yes.
Yep, I'm good.
Okay, so add that and then put them both into your volume chart, and then it should look like this.
Mine looks a little bit different. Could you go back to edit the studies real quick when you get a chance?
What do we type in to find it? Do we type in bind?
What'd you title it as?
Oh, I thought it created a title for me, but I guess not.
So it gives you the option to rename it. If you don't rename it, it just adds it as like a bunch of numbers.
Okay, so should I preview
Just
it
do it
again?
again.
Okay.
Yeah,
all
just do it again.
Steven, would you happen to know why my volume is not being illustrated on my chart?
It's not on your chart.
Yeah, but I have, so when I go to the studies, volume's there, and I have both of the volume indicators, but it's not on the actual chart itself. I'll
Let's
try
see.
I'll try restarting it, see if it refreshes.
Let's see. Share something else. Let's go. So go to your chart settings on the top corner with that little gearbox.
Okay.
And then go into your equities. And you should have this volume show volume subgraph checked on there.
Okay, it was unchecked. Okay, there we go. I got it. Thanks.
All right, no problem. All right, everybody got it?
I'm good.
Yep.
All right, so everybody's looks like this, right?
Yes.
Okay. So there's a method to this madness, and it is this orange or yellow line or beige line, whatever you want to call it. That line going across here, right? So that line, everybody see that line, right? That line. So that is the average volume over the past 50 days. So we want to know what the average volume was. So when we get above average volume, we're aware of it. And we want to know if that's buying or selling volume. So for instance, you know, when we sold off here, we had above average selling volume, then we had above average buying volume, and then we kind of drifted down. And then we had all these days with above average buying volume. I had one day with above average selling volume, then another day of above average buying, and above average buying, above average buying. So that tells us that, hey, there's a lot of buyers that are coming in here, a lot of buyers that are coming in. Or it'll tell us, hey, there's a lot of sellers that are coming in here. Like here, when it was selling off here, we had a lot of above average selling coming on, and we were, you know, downtrending with a lot of above average selling happening. Okay. So here we're uptrending with a lot of above average buying happening. Okay. So when we're looking at patterns, when we get into later lessons and we're looking at patterns and setups and different formations, we're going to have to use volume to make our decision of what's going to happen, because whenever we have low volume, right? Whenever we have low volume means we're in a pattern, and then that low volume is going to explode with some high volume, especially when it tapers down. When it tapers up or when it tapers down, there's gonna have an explosion of volume. Okay. So we want to know what the average volume is, and then we also want to know the buying and selling volume. So this is a weekly chart. Let me go to a daily chart. It's going to look better. So here, We had a lot of volume here, a lot of buying volume here. Okay, and then recently we've been having a lot of above average volume. 1, 2, 3, 4, 5, 6, 7, 7 days of above average volume. But you notice that the stock price hasn't gone anywhere. So that's something to be, you know, interested in, right? Because there's a lot of volume being exchanged at this point, but the price isn't going anywhere. A lot of volume, but price isn't moving. Here, there's a lot of volume, price didn't move, and then it shot up. Now, why does that happen? Right, a lot of volume here, price did go up. A lot of volume here, price went down, and then it slowly came back up. But a lot of volume means that people are either getting in or getting out, and a move is going to come in some time. So we have to be aware of that. So let me see if I could yeah, here we go. So let's look at ES real quick. ES. So this is the daily. So this is the daily. So this is a daily chart, and our average volume is here. That's our average volume. So let's go right here. So we know all of this is above average volume. So we know a big move is coming, right? Because we have all of this volume, people getting out, people getting in, people getting out, people getting in. So basically, if we look at this, a lot of volume came out. Big volume came in this day. Big volume came in this day. Big volume came out this day. A little bit of volume came in today, above average volume, but not anything compared to all of these days. Okay, so it's telling you that, you know, whoever got out or whoever's getting out got out. Maybe they got back in for a little pop, and they're possibly going to try to get out again, or they're going to break on through and there's going to be a whole bunch more to get in, but the volume's decreasing. So we don't want to expect another huge volume. So we've got to see what pattern when we get there, right? What pattern is happening, and where is the volume telling us that we're going to possibly go? So remember, we have this huge area. So I'll just do pink. So this huge area of extra volume than our average. Typically, our average is very small. But we have huge volume. So because we have all that huge volume, we're going to make a big move one way or the other. Or these people just got out. So we got to be aware of that. Let me see, what is this line? Oh, I don't want that. Okay, so this is our volume line. Got to pay attention of above average volume, below average volume. Now, if we're making new highs, right? If we're making new highs on below average volume, that's a concern. We want to be making new highs on big volume. Same thing, if we're selling off on low volume, that says something. So this is why we want to know that average volume, and then we want to know the buying pressure and the selling pressure. Who's in control? So right now the selling pressure is in control. The buying pressure is not in control. It's in control of this small trend, but where's the larger trend? This is the larger trend. Okay. Now, what makes a trend? Lower lows and lower highs. Lower low, lower low, lower low, lower low, lower low. Lower high, lower high, lower high, lower high, lower high. Now, we cannot get out of this downtrend until we break this high. So we need to break this high in order to get out of this downtrend. Why is that? Because if we come here and then we come here, right below it, right? Even if we come here, right? That'd be more reasonable. If we come here, we still make a lower high, and we could come down here because we don't break that. We need to come here, and once we come here, we break that high, and now we're uptrending. But for right now, what are we doing? We are downtrending. Why? Because we made a low, and now we are setting up to possibly hit this area here to make a lower high. Once we establish that lower high, then we come down on big volume, just like this, and sell off. Okay, so let's look at this uptrend. Higher highs, higher highs, higher lows, higher lows, higher lows, higher lows, higher highs, higher lows, higher lows, higher high. Here, we broke this low, right? Broke that low. Broke that low. Broke that low. Broke that low. Let's see here. And we even broke this low. And we broke this low. So we broke 1, 2, 3, 4, 5 lows. We broke all these lows from this whole uptrend here. We broke all these lows. So are we still uptrending? Long term, yes. Short term, no. Downtrending. Volume confirms it. Volume confirms it because it's high above average volume.
Why do you say short term it's bearish and long term it's bullish? Is it because how quickly we how quickly it came down?
No, not at all. What did I say first thing in class?
Look, start high.
Start high. What's that? The monthly chart, right?
Right.
Okay, so let's look at the monthly chart. Where are we at? 200-day looks solid. 100-day looks solid. 50-day looks solid. 20-day looks solid, right?
Got it. Okay.
Right? So this low never broke. This low never broke. This low never broke. This low didn't break. The 20-day, is a 20-day holding?
Yeah.
All right. So long term, still looking bullish, right? So we could come down and hit 2,700, 2,600 even, and still be bullish long term. Because why? Because this channel and our moving averages are solid. Nothing looks bearish there.
Okay.
Okay. So let's go to the weekly. Weekly, same thing. 200 solid, 100 solid, 50 solid, 20 solid. Now we're below the 20, we're below the 50. Well, no, actually we're above the 50 now. But our moving averages, they're all in sync. They're all in line. They're all bullish, long term, right? So can we come down here and hit this 200 day and then continue on our bullishness? 100%. So long term, still bullish, still very bullish.
So if it
Everything's
were to break all the way through all the moving averages, then you would consider it bearish?
no. Even if it comes down to the 200 day, I'll still be bullish long term. Now, if we break below the 200 day and out of this channel and we close below and don't, put in a little tail like this, then yeah, that would be bearish,
Okay.
especially if it's on high volume, because that's going to be the break of a trend. So we don't break this trend, right? You're not certified bear market until you break 23.16. Once you break 23.16.75, you're certified bear market.
Okay.
If you don't break that, you're not bear market yet. We could even hit 27 and break this low and still not be bear market. Why? Because this is the major low. These are lows as well, but this is the major low, right? That's the major low. All right, go to the daily.
Steve, real quick, if you don't mind. Did I miss adding the support and resistance lines on the right-hand side?
What support and resistance lines?
The lines that you have on the right-hand side?
These ones?
Yep.
No, this is just my analysis that I've done earlier before this
Okay,
class.
thank you.
All right, so we got all that. So we got our volume. So now let's go into the next. Let's keep this moving. All right, so we got our volume. All right. Now we're gonna go into the Ttm Squeeze. Ttm Squeeze, the DMI. We're gonna do the Ttm Squeeze, the DMI. We're not gonna do the CCI. We're gonna actually replace the CCI with the Stochastics. And then we are gonna go into the RSI. So we're gonna go the Ttm Squeeze, the DMI, the RSI, and yeah, that's gonna be for these. So let's go into that. So all right, so let's go back to Valero. All right. So we're gonna go to studies, edit studies, and then we're gonna type in, well, actually, we're gonna go share something else. And we're gonna go to edit studies. Come on. Share something else. All right, there it goes. Okay, now we are gonna go into TTM, and then we're gonna type in squeeze. And then we're gonna go into DMI and type in that. Then we're gonna go into RSI type in that. And then we're going to go into momentum, which I am going to send you guys momentum gauge, and I'm going to send that to you guys just like the volume. And what else? RSI. So then we're going to have the Ttm Squeeze, DMI, the RSI, the momentum gauge. Oh wait, okay, so let me take off one of those. All right, my computer's acting slow. Why are you acting slow right now? Okay, here we go. All right, so okay. Stuck on me. All right, hold on. Share something else. Oh, I see.
Steve, I don't find the momentum gauge.
Yeah, I'm gonna send it to you right now. So share. And then momentum. Momentum gauge. Share. Open link.
It's not available in TOS.
No. I'm gonna send it to you right now. And there it is in the GoToMeeting chat. I put it in there. You do the same thing with the volume gauge.
How do we save the settings? All the settings, whatever we've done.
Just click Save Set As, and we'll do that when we're all done. Just put Save Set As, and then we'll name it. But we'll do that when we get all the settings in. Okay.
Steve, are we gonna add the CCI as well?
No.
Okay. Should I take? Okay.
Yeah, I replaced the CCI with the stochastics. So I'm gonna type in stochastics as well, and we're gonna do the full stochastics, and that is gonna replace the CCI.
Appreciate it.
Uh-huh.
Then it looks like our momentum gauge goes in with the TTM squeeze. I'm good.
I'd like to put it there. Yeah. All right, everybody good?
Yep.
All right, so let's go into the TTM squeeze and click edit. Okay. Let's see here. Let me see screen. Here we go. So it's gonna look like this, and it's gonna be negative down red. That's fine. Negative and up. We're gonna change that to negative and up. We're gonna change that to pink. Positive and well, actually no. Wait. Yeah, I think so. Okay, positive and down. Positive and up is going to be green, and positive and down is going to be light green. So we're going to have this like this, these colors: red, pink, lime green, and bright green. All right. And that's it. Just push OK there. And then we're going to go to the next one. Momentum gauge is fine. DMI, you're going to click edit on that. And let's see, share something else. And your DMI positive is going to be green. Your DMI negative is going to be red. And your ADX is going to be light blue. You're going to push OK. And And then your RSI, you're going to click edit. And you're going to change your RSI to green as overbought and red as oversold. You're going to change, you're going to change the overbought to green, oversold to red. On the home page of the RSI, then you're going to go to oversold. You're going to change that to red. You're going to go to overbought. You're going to change that to green. And you're going to push OK. And then for the stochastics, we're going to edit the stochastics. And then we're going to change the stochastics. Let me see here. Oh, shit. Overbought is going to be. So overbought is going to be yellow. Oversold is going to be green. And then the full is going to be orange, or the full D is going to be orange. And the full K is going to be beige. Let me actually see.
For some reason, I can't see your screen.
Oh, you can't?
Your colors.
Oh, sorry. Let me go back into it. Hold on really quick. Let me see. All right. Let me check something out really quick. Okay, let me okay, let me go to my style stochastics. Okay, here we go. Edit stochastics. Okay, so okay, so the full K is going to be white. The full D is going to be yellow. The overbought is going to be pink. And the oversold is going to be green. All right, everybody got that? So we got the full K white, full D yellow, overbought is pink, oversold is green. So full K is white.
Any change on up and down signal?
No, we don't use that. Let's see, Share that. Okay. So style, style. 2020. Okay. Change that. Edit that. It's gonna be white. Pink. All right, so now your charts. Actually, I am going to change one thing. Let's go into studies, edit studies. So, share something else. All right. So I am going to move my DMI to the top. Okay, so my all right. So I want my RSI. On my RSI. So I like to do this because my charts, I like my chart more than my indicators. So I am going to put my RSI inside of my buying volume, and then I'm going to put my DMI right under that by itself. And then I'm going to put my Ttm squeeze and my momentum gauge in the same column, on the second column, and then my stochastics going to be last. So my volume average, my buying selling pressure, and my RSI is all going to be in the volume. And then my DMI is going to be by itself. My Ttm squeeze and my momentum gauge is going to be in a column itself, and then my stochastics are going to be on its own. All right, and then I'm going to put save, set as. Save study set as, and a little Windows then pop up, and I'm going to name that, you know, class setup 2020. And I'm going to push save. And I'm going to push OK. And then my chart is going to look like this. So I have my RSI inside my volume here. I have my DMI here. I have my momentum here. Yeah, I think I'm missing something. Let me go back to my. Okay, so I have my DMI in my volume, and I have my RSI by itself, and I have my TTM and my momentum in the gauge. Okay, so I just need to switch the RSI and the DMI, and then we're good. All right, that's why it was looking funny. So class, so go back to edit studies, and Okay, edit studies, and then I am going to put my DMI inside my volume, my RSI underneath that. There you go. So DMI volume, buying pressure, RSI, TTM squeeze momentum, and stochastics. Okay, good to go.
Okay, can you leave that there just for a second so I can reorder?
Oh, sorry. Let's see here. All right, there you go.
Appreciate it. All right, I'm good. Appreciate it.
All right. All right. So then we go into charts. Okay. Push that save as. All right. So now all this should correlate. Okay, now what we want to do is when all these correlate, we like to see that. So let's explain each one real quick. So DMI green means buyers are in control. DMI red means sellers are in control. Okay, DMI blue is the average. Once the green or the red crosses over the average, that suggests a trend change. So here we have DMI green in control, means that the buyers are in control here. So buyers are in control. Okay, buyers are in control. Let me zoom out real quick. Okay, so buyers are in control. Buyers are in control. Here, the DMI crosses over the blue, and even though the price is still high, this is telling you that the strength is actually weakening and buyers are losing control. And this is telling you there's going to be a possible trend change soon. And after it crossed over, it went sideways and then it started a downtrend. And then what happened? The DMI red crossed over the green and crossed over the blue and took control, and it's been in control ever since. And now it looks like the DMI blue is trying to cross over the DMI red, suggesting that in time there's going to be a possible trend change as well. All right, so that's the DMI. DMI green, buyers are in control. DMI red, sellers are in control. DMI blue, trend change possibly coming. All right. Now, Now RSI. RSI above 50 is bullish, below 50 is bearish. That's what you have to know. 50 is your support and your resistance line. That's what you have to know. You don't have to know about 70 and 30 and all that stuff. You just need to know 50 line. So above 50, very bullish, below 50, bearish. Okay, right now we're below 50, we're at 19. That's very bearish. Okay. DMI is red, so sellers are in control. We're having a crossover, and also the RSI made a low, but it looks like it wants to make a higher low. So what happens when you make a higher low? You're uptrending. So that is possibly going to go uptrend. So the trend is possibly going to change on Bolero. Possibly. Now, let me clear this. Excuse me, when. All right. So the RSI is typically going to be in line with the stock chart. So if I change this to a line graph, let's see, go to the weekly chart. Typically, the RSI and the chart are going to be very, very similar, if not completely similar. So here we have a dip, RSI had a dip, we had dip, made a new high. And then, let's see here. Here we go. All right. So then we're down and we're down. So the RSI and the stock chart are supposed to be identical, almost, pretty much identical. Now, when you have a divergence, that is something that you need to consider, right? So if the stock chart is going down, but the RSI is going up, then that is what we call a divergence, and that could be the opposite of whatever it's doing, right? So if the stock chart's going down, the RSI is going up, the price can switch and go up because the RSI is the relative strength index, telling you how strong the particular stock is. If it's going up, but the stock is going down, it typically means buyers are coming in behind the back door, right? Or if the stock price is going up, but then the RSI is going down, it means that people are leaving the stock, right? There's sellers exiting the back door, and the price is just being inflated artificially, and it's going to tank. Okay. So let me see if I could find a good divergence. Let's see here. No real divergence. Oh, here was the divergence. So we just missed the divergence right there. So we had the stock price go up here and then make a new high here at 33.80, but yet the RSI made a high here and then it made a lower high here, and then it broke down. And then here we made a high and then broke down. So the RSI was warning us before this dropped off and sold off. So that was a divergence, a bearish divergence. All right. So let's just see here. Let's go back to Valero. Okay. Do I see a bullish divergence anywhere? No, not on Valero. Okay. So above 50, we're bullish. Below 50, we're bearish. Okay, so now the momentum gauge and the TTM squeeze. So momentum gauge is pretty straightforward. Up in this green area, we have very solid momentum. When these lines are green, we have solid momentum to the upside. Solid momentum to the upside. When we're down and these lines are red, we have solid momentum to the downside. Okay, it's just measuring the momentum to the upside and to the downside. It's in line with the TTM squeeze with these bars. I don't really like the bars, so that's why I like the momentum gauge, as it, you know, it kind of goes in line with them, but I think it's better. It's a better gauge than the bars. I'm just not a fan of the bars. Now, the TTM squeeze, I love. Why? Because these little red dots, it tells you. So let me put this back to a candle chart. Candle. Okay. So this squeeze, it tells you when momentum is building. It tells you when momentum is building and there's going to be a big pop or a long trend. So for instance, here was a long squeeze here, and then it popped here, and then we had a nice uptrend here. Nice uptrend that made good money there, okay? And it continued on to here. And then we had another squeeze that popped down here and then dropped hard, momentum down, and that had a nice drop there. And then momentum came back up, and then we had a little squeeze, and then we popped down again, and then we had a squeeze and we popped up. So the squeezes are good indications that a big move is coming. So that's, I love the TTM squeeze and I use it all the time. And those go on any time frames. So this is a weekly. The higher the time frame, the stronger the pattern, the stronger the price action, the stronger the indicators, the stronger the move's gonna be. Let me see, edit that.
Do you mind explaining the TTM, the squeeze again, the dots? I guess I'm getting caught up right at September 3rd, where you have your first red dot after that long bullish trend.
So dot just means momentum is building.
And the other direction.
No, it doesn't tell you direction. The momentum tells you the direction. So it just tells you that momentum is building.
Okay.
Don't read into it too much. It just tells you momentum is building. The bars and the momentum gauge is going to tell you the direction. Most importantly, price action is going to tell you the direction. So this could build a squeeze down and it could push up, but it's probably going to be a false signal and it's going to consolidate more, and then the real move's going to come. Okay. So all you need to think about is when I see dots, that means that a big move's coming. That's it. That's all you have to train your mind to do.
Which
When I
color?
see red dots,
Red dot.
of course, red dots.
Okay.
Red dots. When I see red dots, big move's gonna come.
So the green dots do not have any significance.
Green dots are it firing. The red dots is building. Green dots is firing.
Got it. Okay.
That makes sense. Appreciate it.
Uh-huh. All right. Any more questions on the TTM? All right, so now we go into stochastics. Now I really like the stochastics as a bottoming gauge and a topping gauge. I really like it for a bottoming gauge. So to catch bottoms or to catch trend reversals on the downside. So whenever the stochastics below 20, that means it's oversold, especially if it's below 10. If it's below 10, it's really oversold. So what's that, 20? Oversold 20. So when it's below 15 or 20, it's telling you it's oversold. The market is oversold, especially when you're below 10. You're extremely oversold, and that is where you want to be looking for reversals. And that's when the white line curls up and tries to cross over the yellow line. When it does that, like here, when it does that, when it gets below and then it crosses over that yellow line, that is a good indication that a reversal is in and it's going to go the opposite way. So let's mark it. Let's mark it here where we had that reversal, right? We were below 20, we were below 15, we were below 10, and then we reversed and we crossed over, and then our price action bottomed right there. So we're down, we're going to a downtrend, and we bottomed here, and then we started a little uptrend that we went up for maybe 2 weeks, 3 weeks, and before dropping back down, and then we hit that below 20 again, and then we came back up, and then we dropped again, but we made a higher low, then we went really up. So we could see this higher low here, and we could see that higher low here. So both made a higher low, and it moved up. So now the stochastics on the weekly chart are moving below 10. So that's a good indication that a reversal is going to come soon. We go to the daily, we could see that the stochastics are below 10. They just got above 10 right here on 13, and they need to cross over this in order for the reversal to come. So right now this is basing on here. So oil might have a nice day tomorrow. Honestly, looking at the indicators, it could have a nice day tomorrow. Now, can it sell off? Yeah, it could sure sell off still. We could still take this back down to 2, but the daily looks like it's oversold and it wants to push back up. The weekly looks like it's oversold and it wants to push back up. And let's see the monthly. The monthly is still going down towards oversold. But where are we sitting at? We're sitting at the 100-day moving average. Okay. Let's see. The RSI is oversold here, below 20. Momentum is down, and buy volume is starting to come back in. And we're basing, right? We're going sideways. So the trend is down. Trend is down, and this 20-day is acting as resistance. So this could pop to that 20-day. This could pop to that 20-day and see if that can, get this stochastics out of that oversold territory and get back up. All right. So now let's
Steve, can
look
you do
at
the Costco same graph?
let's get through the class. Okay? We're already kind of over time. No analysis right now.
Okay.
All right. So now let's look at the crossovers. Let's do the crossovers. So let's see, where did this cross over here? Here we go. So about here. So we have two crossovers. So let's duplicate that. And we're going to go here. Right there. Okay. So on this first crossover up here near this highs, we have the blue crossing over the green DMI. And then we have the RSI coming down, but that's not really a big deal. We have the stochastics crossing over on the yellow and heading down, and this one crossing down over the red. Okay. And then we have our momentum losing momentum here. But these aren't super red flags. This is the reddest flag here. We have the DMI red crossover, the green and the blue. We have the RSI cross over the 50. We have momentum cross to the downside with the squeeze to the downside. And then we have our stochastics heading to the oversold. So whenever we have these crosses over, when we have the green crossing the red or the red crossing the green, when we have the RSI crossing the 50, when we have momentum crossing either or the up or the bottom with the squeeze, and then we have the stochastics heading over to our oversold or to our overbought positions, those are considered a crossover. And when we have that crossover, that is telling us that the trend is going to change or momentum is going to push in the direction that it's suggesting. So here it's saying momentum is going to push to the downside because we have our DMI red crossover, our RSI crossover, momentum's crossover, squeeze to the downside, and stochastics to the downside. Okay, now let's go over here on this crossover here. So we have the green crossing over the red here, and we have the RSI crossing over the 50 here. We have the momentum crossing over to the upside here, and then we have our stochastics crossing over into our overbought position, and we have an uptrend starting. So we look for these to, so price action is going to be, price action is going to be king. But indicators are going to confirm that. So right here, after we broke this high here, that was a good indication that we're going higher. But our indicators also told us right before it broke that high that buy volume was coming in, DMI green crossover, RSI crossover, momentum's crossing over, and stochastics were crossing over. So price action is always king, but the indicators are always going to help us as well. Tell us, hey, everything looking good? So this told us here that we broke the downtrend, right? This was the downtrend, broke that downtrend, and then right after we broke the downtrend, 2 candles later, we have our indicators telling us, hey, it's confirmed we're going higher. Okay? So I want you guys for homework to look for these kind of crossovers. Look for the DMI crossover, the RSI crossover, the momentum crossover, and the stochastics moving in the right directions. Okay? I want you to look for one on the upside and then one on the downside. Okay? So when you know, on the price action here, so the price action here and the 20-day, it broke, right? So this uptrend broke and this 20-day broke. So this is the area that it broke. And then also this is the area where the DMI red crossed over, the RSI crossed below 50, momentum crossed to the downside with the squeeze forming, and stochastics were heading to oversold. So all of these lined up right here before it started dropping as well. So now when we look for this reversal on the current trend, right? We're going to look for this downtrend to break. More importantly, we're going to look for the 20-day in this downtrend to break. And then after, we're going to look for our stochastics to move up, momentum to move up, and then RSI to be above 50, and then our DMI to cross over. And that's when it's going to confirm that we're going to go into a new trend, and then that's where we could go longer, long term. All right. Everybody get that?
Yep.
Awesome.
Yep.
Awesome. Now, I want you guys to open up your edit studies one more time. All right, and then okay, so then we have our edit studies here, and now everybody make sure you saved it. Okay, make sure you saved it. So make sure you saved as you saved it. So make sure you saved it. Okay, now I want you to remove simple moving average, all of them. Remove them all. Remove all the simple moving averages. Okay. Now I want you to type in daily, and then I want you to click SMA. And I want you to click that 4 times. All right. So we got 4 daily SMAs. Okay. And now I want you to go in and change all of them to exactly how we changed the simple moving averages. 150, which is yellow, 100, which is orange, 200, which is red, and 120, which is blue. Okay. So go in and change that. Just the length. Change the length. 50. And that is yellow. And then draw as a straight line. So it's going to give you, so this is what it's going to look like. So it's going to look like this. You're going to leave it to day because that's what you want. And then it's going to look like this, like little dotted dashes. You want to change that to a line, to a straight line. Then change the color to orange, or I mean yellow, and then push OK. And then do that to all the rest for the 100, the 200, and the 20. And I will do that as well. Okay, so the 50's done. $100 is done. $200 is done. And the 20 is done. So now it will look like this. Okay, now I want you, once you have it down like this, I want you to put save as, and I want you to put intraday chart.
What were the colors again? If you don't mind me telling me again.
The 50-day is yellow. The 100-day is orange. The 200-day is red. And the 20-day is blue.
Great, thanks.
Mm-hmm. All right, once we got that and we save that, I want you to push OK. And then we are going to go back to our chart. And then now, when we go to our 15-minute, right, we're going to have our daily moving averages on our lower time frames. So we're not going to have our 15-minute simple moving averages. We're going to have our daily averages on our lower time frames, because the lower time frames moving averages don't mean nothing to us. Those don't mean anything. They're just noise. We don't need them there. Now, when we're day trading and we have our day trading chart on, we have our lines that are important, our daily lines. So we see that, you know, our 50-day was acting as resistance here, and then our 20-day was acting as resistance here. And we could see that, you know, when we go on a 15-minute chart, we go on a 30-minute chart, we could see that resistance hit and sell off. So that's why it's beneficial for us. Let's go, let's say 20 days here. So here, it hit our 200-day and our 20-day, and then sold off, and then came back, hit our 20-day again, and sold off. So if we didn't have these here, and we're trying to trade on intraday, we wouldn't get that. We wouldn't have that information. We'd have to go to our daily chart to find that information. But since we put on our daily SMAs into our lower time frame charts, now we could have that information, and it's going to tell us, hey, you're coming up to a resistance point, or hey, you're going to come up to a support point, right? And that's very beneficial for us. All right. So I use two charts when I trade, one on the left, one on the right, and I have one for my daily and my higher time frames, my daily, weekly, and my monthly. And I also, when I'm day trading, I change that to hourly. And then I have my right chart, which is my lower time frames, which is my 15-minute, 5-minute charts that I keep pretty much on the 15-minute chart. And that's what all these setup have. So I have two different charts with two different setups. You could switch back and forth, or you could have the same thing where you have one side on as an intraday and the other side as a higher time frame.
So how do you monitor the multiple stocks?
You're focusing on one stock right now, right?
No, in a day trade, you do every day.
Huh?
In a
I'm sorry, you cut out.
no, when you're doing the day trading every day, at least you have like 4 to 5 tickers working on.
I have more than that. I have probably 20 tickers. But
So
you're not there. You got to focus on one first. You're trying to jump the gun. Why you want to go there already?
okay, hi.
So one last thing that we need to put in on the lower time frame chart is a VWAP. So we double click on the VWAP, and then it pops into here, and then we click edit. We click edit there, and we go into our edit. So we go into our edit, and then we're gonna have the first one, it says VWAP, and the VWAP is purple. I want you to leave it alone. Let the VWAP be purple. Now, the next one is gonna be the upper band, and the upper band is gonna be this pink color. Now, I want you to click show plot. I want that unclicked. I don't want that showed. Okay, so it says show plot, unclick that. Now go to the lower band. It's going to be like a beige yellow. Now click show plot again, so it's not clicked anymore. So click that, so it's not clicked. So the only one that's clicked is the VWAP. So the VWAP should be the only one clicked. That is the only one I want you to click. Okay, once that's happened, upper band, not clicked. Lower band, not clicked. Up VWAP, yes, clicked. Then you push OK, and then you save. And then you save that as your lower time frame or your intraday charts. And then push apply, okay. And then you'll have your VWAP here. So your VWAP, you only use it on your 5 and 15-minute charts. You don't use it on your hourly or 4-hour or daily or any of that, because it's just noise. Now, the VWAP is a volume weighted price. So the volume weighted price is going to tell you above the VWAP is very bullish, because the volume weighted price is the actual price of what the stock should be. So if the price is below the VWAP, then that's going to tell you that people aren't willing to buy it for what it's worth. Now, if the price is above the VWAP, that means people are willing to buy it more than what it's worth. Okay, so that's what the VWAP is, and the VWAP acts as support and resistance. So we try to get above the VWAP, but we couldn't do it, and we sold off, and price was below the VWAP. People weren't paying for what the price was worth. They're paying lower. Okay. Here it was up and down, choppy. Here it pretty much stayed on the VWAP, so it was pretty much people were paying for what it was worth. Same thing here. It was pretty much on the VWAP. Oh, I'm sorry. There's one thing I forgot to mention to you guys, because the system automatically does this. We got to go to chart settings here. Go to chart settings, and oops. Let's see. Chart settings. So we go to chart settings here, and we go to price access, and then you want to unclick fit studies and unclick fit study markers. Unclick both of those. Okay, unclick both of those. And if you want to put your expansion areas 20 up and 10 down, that's fine. I do that. And then if you want to go to your time access and you want to put 15 bars to the right, that's fine as well. That gives me more area to work at. You could do that as well. And then you push apply, but you definitely have to unclick these fit study markers and click unclick fit studies, and then you're gonna have a better appearance. So let's go back to the chart. And so my chart looked like this before. So that's how my chart looks now. And then once I click unfit study markers and studies, then I push apply. And then now I have a lot more room to work. So it's not up showing those lines. So those lines are still there, but I have a lot more room that I could see my chart and my graph. So here we can see it hit the VWAP, and then it stayed below VWAP. It couldn't stay above, and then it sold off. Then here it got below VWAP, but then held it, tried to stay above it, and then sold off. Here we maintained and bounced on VWAP the whole day. And then here we got below it, but then got above it, and then bounced on VWAP the remaining day. And here we rejected VWAP and stayed below VWAP the whole day. So that's another tool intraday that we use for support and resistance is VWAP. It tells us pretty much how strong the stock is. So above the VWAP, it's going to be strong. Below the VWAP, it's going to be weak. So people are not willing to pay the price of what the stock's worth if it's below the VWAP, and people are willing to buy more than what the stock is worth when it's above the VWAP. All right, any questions on that?
Is there any thumb rule?
Huh?
Percentage VWAP or below?
I'm sorry, say that one more time.
Is there any a dollar value or percentage like above VWAP? It can go 10%, 20% like that, or is there any thumb rule?
No, the VWAP is automatically in there. It's the volume weighted price. It's measured with the volume that is that day versus the supply and demand of that day as well. So
okay.
So there's no option to change it or anything. It's going to be automatic. All right, guys.
I had a
Yeah.
question real quick. Sorry about that. I know in the beginning I was trying to download the app itself and set up and everything, log in. So I might have missed when you had when you were able to change the way that you see your candlesticks as far as them being green and red, and that they don't have anything to do with bullish candles or anything like that. I forgot what it was, but I wasn't I don't think I got
That's
that.
a Ttm Trend.
Okay. And for some reason, mine is showing up as blue and red.
Yeah, you have to go to the settings and scroll down to the globals and then change the blue to green.
Chart settings?
No.
Okay.
Edit studies and go to the Ttm Trend settings.
Gotcha. And then,
Scroll all the way down and it says globals. Click that drop down menu
okay.
and then there should be a red and a blue.
Gotcha. So trend up green. Gotcha.
There you go.
Alrighty. Cool. Thank you. That's all.
All right, no problem. All right, guys. So our charts are set up. We have our higher time frame charts, and then we have our lower time frame charts. So we have, so if we go to our class, we have our higher time frame charts set up, and then if we go to our what's it called? Intraday. Can't find my intraday. Okay. Oh, maybe it's on studies. Yeah, here we go. There you go. So I have my studies, my intraday. Okay. So let me save that again. So let me go back, unclick fit studies and fit study markers. Okay, push apply. Okay, and then I want to put my studies, save study set. Okay, intraday class, save it. Yes, okay. So if it ever goes back to like how it messed up, just go to your chart settings and go to your price access and unclick those markers. And then you could go to style and save style as, and then you put, you know, type it in as whatever you want, class 2020 intraday, and then include patterns and study set, and you check that yes, and then you push save. And then now, if I ever go to class 2020, then it's gonna go here, and then if I go to class intraday, it's gonna go back here. Everything's gonna be set up like I want it to be. Sound good?
Looks good.
All right, so that was your homework. Choose your one stock and send it to me with your sector and your market, and then also do your crossovers, your bullish crossover, your bearish crossover, and then screenshot and send it to me by next class. Sound good?
Hey, Stephen, if I'm going to do the ES, so I could just send you that one, correct? Since it doesn't follow a sector.
Yeah, but you're gonna have to do VIX as well.
Okay.
Yeah. So do
All right.
VIX and ES because those ones go hand in hand.
Okay.
All right. Any questions, guys?
Nope, got it.
Got it. Okay. Sorry, the class went way over time, extra hour. It's just this was a lot of information and a lot of setup.
It was helpful though, man. Thank you.
Yeah, this is
All
great
right.
getting all our
You're good.
indicators set up.
All right. All right. Any other questions before I stop the recording?
Nope.
No. Okay. All right. I will stop the recording.